Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here and TGI Friday. This morning we'll be taking a look at exciting stock market news. We actually have a bunch of notable earnings to look at and we'll see which stocks are the morning's biggest gainers and losers. If you haven't downloaded the TipRanks mobile app yet, what are you waiting for? If you want to access all the latest market news and your favorite research tools on the go, follow the links in the description down below to download it on your phone today. Now let's get right into this morning's exciting stock market news. We are ending the week off with U.S. stock futures in the green. Currently, Dow futures are up 0.44%, S&P 500 futures up 0.27%, and NASDAQ futures up 0.07%. In a recent court filing, Twitter is alleging that Elon Musk is being investigated by federal authorities in regards to the $44 billion takeover. According to Twitter, Musk's lawyers gave information to the U.S. SEC and Federal Trade Commission regarding the deal at the end of last month. However, they did not share the same with Twitter, citing investigative privilege. Twitter has demanded a copy of those documents, but was refused them. One of Musk's lawyers, Alex Spiro, told Bloomberg that the letter was a misdirection by Twitter and that it's actually Twitter's executives that are under federal investigation, which Twitter officials have denied. So the drama continues with the Twitter versus Elon Musk. Analysts rate the Twitter stock a hold while all of this continues to be sorted out. Netflix will be adding ad-supported streaming in November. The much-awaited ad-tiered streaming plans will start at $6.99 per month. Netflix is hoping to attract new customers and win back lost customers through the launch. There will be about 4 to 5 minutes of commercials every hour that will be played both before and during the content. This basic plan with ads will be offered initially in 12 different countries, launching in stages between November 1st and 10th. Analysts currently rate the Netflix stock a hold with an average upside just shy of 7%. Beyond Meat will be slashing their workforce as they face a worse than expected end to the year while they battle inflation. Beyond Meat said that their consumers are foregoing plant-based foods in favor of cheaper meat options as costs rise. They now plan to cut around 200 jobs, which would be nearly 20% of their workforce as they look to cut down their costs. They expect to incur a one-time cash charge of about $4 million linked to the layoffs. Analysts currently rate their stock a hold with an average upside of 28%, though the most recent rating came in as a sell with a downside of 45%. And Kroger has confirmed that they've made an offer to purchase Albertsons that totals over $24 billion. The proposed deal would have Kroger acquiring all outstanding shares of Albertsons for $34.10 per share for an implied total value of $24.6 billion. It would also include the assumption of their $4.7 billion in net debt. They stated that we are bringing together two purpose-driven organizations to deliver superior value to customers, associates, communities, and shareholders. Analysts currently rate the Kroger stock a hold with an average upside of 12%, while the Albertsons stock also comes in as a hold with an average upside of 14%. Now moving over to notable earnings reports. In the pre-market this morning, we've heard from a handful of big banks, starting off with JP Chase, whose results came in ahead of analyst expectations. For their third quarter, JP Morgan reported earnings per share of $3.12, beating the analyst estimates by 23 cents. Their revenue of $32.72 billion was up over 10% year over year and beat expectations by $840 million. Analysts rate their stock a moderate buy with an average upside of 23%. Also coming in ahead of analyst expectations was Wells Fargo. For their third quarter, Wells Fargo reported earnings per share of $1.30, beating estimates by 21 cents. Their revenue of $19.5 billion was up 3.6% year over year and $720 million ahead of expectations. Analysts currently rate their stock a moderate buy with an average upside of 24%. We also heard from Morgan Stanley. They did just beat on earnings, but a year-over-year decline in revenue caused them to miss analyst expectations. Their third quarter earnings of $1.50 was 2 cents ahead of analyst expectations. Revenue of $12.99 billion was down nearly 12% year over year and missed expectations by $320 million. Analysts currently rate their stock a moderate buy with an average upside of 18%. And we also heard from PNC Financial, who was able to beat analyst expectations in their quarterly report. Their third quarter earnings per share of $3.78 beat expectations by 9 cents. Revenue of $5.55 billion was up 6.7% year over year, beating expectations by $150 million. Analysts currently rate their stock a moderate buy with an average upside of nearly 19%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Nutanix after they said they are exploring takeover offers. Trading under the ticker NTNX, their stock is up over 16%. They're followed by Westlake Chemical under WLK, up 6.7%, and BRP Group under BRP, up 6.3%. Our biggest losers this morning are led by the Trex Company. Under the ticker TREX, they're down 5.35%. They're followed by Vertical Aerospace under EVTL, down about 5%, and Dentsply Sirona under XRAY, down 4.3%. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button, say good morning in the comments down below, and don't forget to download that TipRanks mobile app. Thank you guys so much for watching. I hope you have a wonderful weekend, and I'll see you back here on Monday.